LIC's IPO, which is much awaited. Can we invest in this LIC's IPO? Will it help you create a good profit, or will it go down immediately after listing down? Will it be a good addition to your overall portfolio, or it is going to hurt your wealth creation process? Let us discover. Hi, this is Ramalingam from holisticinvestment.in. We help individual investors like you to take a right financial and investment decision. First, let us understand the background of LIC IPO and some important details. Then we will go ahead and understand the valuation and our recommendation. LIC IPO is supposed to be a crowd puller because they were planning to launch it for 65,000 crores. 5% of the overall equity is going to be getting divested. There was the initial news. Then subsequently, because of the market climate now, they have reduced the stake to 3.5% only, which is 21,000 crores now. So, if you look at it, LIC IPO is open from 4th to 9th May. Between this time, you will be able to subscribe for a minimum share of multiples of 15 shares you will be able to buy. And if you are able to successfully get it, then the shares will be credited to your Demat account on 16th May. And the share prices is going to get listed on 17th. So 17th is the judgment day, whether we are going to get the listing gain or listing loss. We are not sure. We have to wait and see. In case if you are not getting allotted the shares, then in that case, on 30th itself, you will get your refunds. For retail investors, there are 35% allocation is given overall. Right. How the LIC share price has to be valued for life insurance companies, not just PE ratio. There is something called embedded value. Embedded value is basically a way to measure life insurance companies. It has got a difficult formula. So embedded value is nothing but the value that someone is ready to pay to buy the life insurance company as a whole, or the value that is required to start a similar company. That is what embedded value is all about. So as far as this embedded value is considered, as of March 31st, 2021, the LIC's embedded value was 95,000 crores approximately. Whereas on February 2022, it is valued at 5.4 lakh crores. How there can be a quick jump? That is the question, right? So if 5.4 lakh crores, then it is valued at 1.1 times embedded value. So is it a good value? That is something we have to get an answer, right? So LIC was sharing the profit with policyholders and shareholders in the ratio of 95:5, 95% for policyholders and 5% for the investors, that is the government so far. Now that got changed to 90:10. That is why there is a there's a huge change in the embedded value now, right? And LIC IPO, what is the price band? Another important parameter we have to consider. The price band is between 902 to 949 per equity share. That is the price band within which you have to bid. And last 3 years weighted average earnings per share, looks at the price band looks at 949. It is 202 times of PE ratio, which is relatively on the higher side. 202 is relatively on the higher side. So do we have to consider 202? Definitely it is on the much higher side. But remember, LIC is a company which is too big to fail. It is a large company. So these companies at times may not be available for undervalued price. It may be available only at higher PE ratio, and it may remain in a higher PE ratio for a longer time frame. It is possible. Like many times for large cap companies like Unilever or Nestle, similar situation has happened. We don't know. LIC also may fall into such a category. There is a possibility, right? If you take the last 6 months, earning per share, then its P ratio is 200x. Its P ratio is 200x. So based on the earning per share, if you look at it, then definitely it is not undervalued. It is overvalued based on the P ratio, right? So the IPO price, if you look at it, it is between the range of 200 times or 212 times of the P ratio. So do we have to go for it at such high overvaluation, right? There are certain other points when you are investing in a life insurance company which you have to look at it. And when we analyzed those points, what are our key observations? Number one observation is LIC was having a monopoly till the year 2000. After that, 71.8% is what their share in 2016. In 2020, it came down to 64%. From 100% after monopoly is over, it came down to 71 in 2016. Within 16 years, rest of the companies would capture close to 30%. Now they are close to more than 35% they have captured. So that means slowly LIC's overall market share is coming down, and in my humble opinion, it looks like that LIC's market share will subsequently also come down. So the number of new policies, number of overall new premiums which they collect seems to be coming down. Though there is growth in the overall number of policies and annual premium, new premiums they are collecting, the growth rate will come down. There is growth, but growth rate will come down. And comparatively, compared to the private players, LIC has got more of traditional policies. Yes, they also have ULIP policies, but they have to reinvent new products, right? That way, LIC is still belongs to old school and have not come out with a lot of modern policies. So LIC have to reinvent their products, reposition some of their old products. So that way, LIC is at a huge disadvantage. All right. So what are the other positive factors or negative factors in favor of or it's against LIC's IPO that we have to consider? The current IPO is just a 3.5% stake, and the government will continue to hold 75% in LIC for the first 5 years. Then they will continue to hold 51% at all times after 5 years of the listing. So this is a commitment from the government. So LIC's price is definitely on the higher side, much higher side. So do we have to invest in such a high priced life insurance company is something we have to look at it. There are other life insurance companies which are available at a reasonably good valuation or comparatively a better valuation. So do you have to invest in LIC's IPO because of its higher valuation? It is definitely a negative mark. Because it is highly priced, may or may not get the listing gains, right? And also the market is also not very bullish at this point in time. From October 2021, the market touched 60,000 levels. Then because of the war-like situation, market is range bound now. Market again reached 60, it went down to 50,000, 52,000. Then again it touched 60,000. Now it again came down to 57,000 levels. Market mood is also not very bullish. So as and when it is getting listed, the likelihood of it is getting listed for a premium much higher than the listing, than the issue price seems to be low. Though there is a probability, the probability seems to be very low in favor of listing gains. So if you're looking for listing gains, you can definitely avoid this LIC IPO. From the long-term perspective, yes, LIC is too big to fail. So if you are a direct equity investor and you know how to construct an overall direct equity portfolio and do it, then maybe you can consider, definitely you can consider having an exposure. But suppose if there is a fall after the listing or subsequently, then have enough money to average it out. Don't like invest whatever the money, whatever the allocation you want to give, don't give it at one shot. Maybe you can give 25% of the allocation you want to give, you can give now, have the 75% as a reserve. Whenever there's a dip in the LIC's share price, have it. So as a long-term holding, you can consider, and also be ready to average it out when the share price falls down. In case if you are an investor now who is not comfortable constructing a direct equity portfolio just for LIC's namesake, you want to invest in this IPO, this is the first time you are investing in equity and you are not sure about like whether LIC will give you listing gains or not sure what kind of allocation to give, then maybe you can consider diversified equity funds to create long-term wealth. If the fund manager feels LIC's IPO will be a good choice, then definitely he will have exposure, right? Instead of you deciding the entry and exit allocation, the fund manager, you can outsource it to the fund manager. He will be a better deciding authority. So the final decision, what do I suggest? Because it is highly priced, either like invest through mutual fund route, or if you are comfortable giving allocation to LIC IPO, just give 25% allocation now. Later on, when there is a dip, try to average it out. If you are only a long-term investor, please invest in this IPO. If you are looking for listing gains, the probability seems to be very low. We have done a detailed analysis of this particular LIC IPO. It is available in the description box as a blog post. You can click the link and read the detailed analysis. You will be able to read. If you have any questions related to this particular IPO or any other investment options which can help you meet your financial goals, we are there to clarify you. You can book a free appointment with our financial planner. The registration link for booking the free appointment with our financial planner is also given in the description box. Will you be interested to attend insightful investment webinars? Then feel free to book your seat for our next upcoming webinar. The registration link for the insightful webinar is also available in the description of this video. If you like this LIC IPO video, feel free to subscribe to our YouTube channel so that you will not miss any of our future videos. Also, I request you to give a thumbs up to this video. Thank you. Bye.